Hello and welcome to The Trade. Before we get into the technicals, a quick look at what traders are watching. And in a sign, Iran is potentially strengthening its control of the Strait of Hormuz. It has seized 2 ships. The US military has intercepted at least 3 Iranian-flagged tankers in Asian waters, with US President Trump not setting a deadline for an end to the ceasefire extension. The White House saying that he wants to see, quote, a unified response from Iran's leadership to US proposals to end hostilities. In the UK, inflation rose to 3.3% in March, up from 3% the prior month, reflecting the impact on prices from the Iran war, which the Bank of England fears could lead to a return of the country's persistently high inflation problem. However, economists said the increases were largely driven by fuel, and they were unlikely to push the Bank of England into raising rates at next week's policy meeting. US Treasury yields were up slightly, the 2-year 3.79%, the 10-year at 4.3%, and Australian 3-year government bond yields rose to 4.65%, the 10-year at almost 5%. While having a quick look at currencies, we are seeing the Australian dollar trade at 71.5 US cents. Let's get some technical analysis now with Zoran from Blueberry Markets. Kicking it off with oil, Zoran, good to see you, back above $100 a barrel.
Yeah, some would say, thank you for having me, by the way, Juliet. Some would say it's a bit of a surprise, given the fact that we have seen some progress on the front of a ceasefire in the Middle East and Strait of Hormuz. However, market is actually perceiving that potentially as an escalation of the actual challenges that are going on right now, and market is adding a risk premium on that, which means that both crude and Brent are well above $100 at the moment. I think a lot of investors at the moment are positioning themselves on the basis that they are looking at the future contracts, which are obviously elevated. And as a result, crude is actually well above the $100 mark right now.
Let's talk about the Kiwi as well. So that has edged higher against the dollar on this hotter than expected inflation data. What are you seeing in terms of potential further strength here?
Yeah, I think the reinforcement of the Reserve Bank of New Zealand and the data that's come out this week, it demonstrates definitely an impact of crude oil elevated prices that are feeding into the global supply and demand, especially on the inflation front. And we can actually see that New Zealand dollar has been actually somewhat performing really, really well over the past few weeks. We also have to go one step back, Julia, and indicate that when it came to monetary easing or back in 2022, Reserve Bank of New Zealand was one of the first central banks actually that started hiking the rates. Now we've actually seen potentially the same scenario unfolding. So the long-term downtrend on this chart when it comes to New Zealand US dollar since around 60 cents has been actually broken now. We actually see a sideways move on the chart that's consolidating around 59 cents. We feel that Reserve Bank of New Zealand will potentially start hiking rates or consider raising 25 basis points as soon as the month of May. That obviously feeds into the narrative that the inflation and target band of 1 to 3%, which is what they perceive would be neutral, is currently out of scope. And in order to tame the inflation, this is probably the only way to kind of manage it and mitigate that. So on the back of that, we actually seen a bit of a sideways move over the past few days. I wouldn't be surprised if we see a bit of a backdrop in consolidation and perhaps a bit of a retracement. That could go as long as 58 cents or so. But the overall trend has been broken. I feel like the NZ, the New Zealand dollar, is actually quite bullish right now. It's probably more so in line with also with the euro as well as the British pound, because we actually, if you have a look at the charts, they're very, very similar at the moment. And the narrative around the fundamentals and the reinflation coming back into the market is actually feeding on all 3 charts. So as long as US dollar continues to head lower, we might see further bullish uptick in all these currencies.
Yeah, and looking as well at some other, I guess, what we call risk assets now as well, including Bitcoin. So it's extending its advance. What happens next here, Zoran?
Yeah, I feel like Julia BTC is replicating pretty much risk on sentiment that's prevailing, which many find by surprise at the moment, given all the geopolitical risk and unfoldings that are going on across the globe. Equities seem to be exceptionally well, and on that backdrop, Bitcoin appears to be actually following that trend. Just to go one step back, around reporting season in the US and S&P 500, majority of the companies that have reported so far indicate that 80% of them have actually beaten the market consensus when it comes to the expectation and the results. So it's not a surprise that equities are doing exceptionally well, and Bitcoin seems to be following that trend at the moment. What I do have here, it's a bit of a cluttered chart, but we can actually see since around October 2025 that medium to long-term downtrend has been broken. And as we always anticipate and say when referring to technical analysis, trend is your friend and trade the trend. We can actually see the uptick in an uptrend has been actually elevated, and the move month to date on Bitcoin has been around 16%. So it has been one of the best performing asset classes so far. Just to add on top of that, we're seeing an exceptional amount of spot ETFs coming into the market. And just earlier in the week, we have seen around 664 million of retail and institutional money coming into the spot ETFs at the moment. That comes off on the back of the 1.3 billion over the past few weeks. So there is that demand for Bitcoin and risk assets that's coming into an effect at the moment. We feel like the sentiment is getting a fairly bullish. I would like to see a level broken around 78,000 to 80,000. If we can do that, then hopefully we can actually do our next leg up around 95,000. Any reversal around these levels, any escalation in the Middle East, any risk of sentiment and short covering might see Bitcoin come off a little bit and test that $70,000 to $72,000 level. Break below that would indicate that long-term downtrend is likely to resume, and on the back of that, I would get quite bearish on cryptos.
All right, Zoran, always good to chat. Thank you so much for your insights, Zoran Kresovic there from Blueberry Markets. That does it for this edition of The Trade. Be sure to join us next time.